In today's video, I'm comparing conventional to FHA. So let's go ahead and get into it. Conventional loans. Well, conventional loans are loans that are not insured by the government. Okay. Now, they are offered by private lenders, Fannie Mae and Freddie Mac. And these loans can be conforming or high balance loan limits. So, depending on your county, if you're in a high balance county, you can go ahead and you still use a conventional loan. And these loans are ideal for borrowers with strong credit. FHA loans. So FHA loans are insured by the Federal Housing Administration, so that makes them a government loan. And these are designed for low to moderate income borrowers. That doesn't mean that if you earn high income, you can't apply for an FHA loan, but that's what this loan was designed for. And they are for lower credit and down payment requirements. So the combination of the two, having a low credit score and low down payment, that is what an FHA loan is good for, having a low credit score and the minimum down. And just like conventional, though, they can be used for conforming or high balance loan limits. Minimum down requirements for conventional. So primary residence, and I'm only talking primary residence on this video. I'm not getting into the down payments for second home and investment. But primary residence, one unit, is going to be 3% down if you're a first-time home buyer. And the definition of a first-time home buyer is an individual who has not owned a home in the past 3 years. And that can also be a free and clear property. If you are vested on title, then you are a homeowner. You are not a first-time home buyer. Now, if you are not a first-time home buyer, then it's going to be 5% down. For a primary residence 2 to 4 unit, the minimum down in a conforming loan limit county is going to be 5% down. So you can purchase a 4-unit property with 5% down in a conforming loan limit area. Where if it's a high balance county and you're in the high balance loan limits, then it's going to be 15% down. FHA minimum down requirement. So primary residence, doesn't matter, 1 to 4 unit, you can buy with 3.5% down with a 580 plus credit score. Now, if you are less than the 580, you have a 500 to 579, you could put 10% down and still purchase with an FHA loan. Credit score requirements. Well, conventional, they recently got rid of their credit score requirement, so they don't have one. But typically, you still need to have at least a 620 credit score. And even then, I will tell you that it's going to be tough to get pre-approved with putting 3% down and having a 620 credit score. That's not going to happen with conventional. Where FHA, the minimum is a 580 credit score for 3.5% down and 500 to 579 for 10% down. Before we move forward, if you are seeking to get pre-approved, I'd love to assist. I offer both conventional and FHA, and what is awesome about being a wholesale lender, I come from the retail world. You can look at my LinkedIn to see those retail institutions, but they have overlays where they will not go down to that 500 credit score. In fact, a lot of them won't even do the 580, where as a wholesale lender, I 100% work with a lender that a lending institution that will do the 500 credit score or do whatever FHA allows. Where if you go to a retail institution, they may have overlays that they won't go below. So if you are seeking to get pre-approved and you feel like you fall within that 10% down 500 credit score, go ahead and scan that barcode or go to my website or click on the link within my bio, and I'd love to assist. Okay, mortgage insurance. Now, this is where they definitely differ from each other. So conventional has the PMI if you put 20% down, less than 20% down, but it is removable at 20% equity. So if you buy a home with 3% down and then eventually it gets to 20% equity, now you have to source this with an appraisal. You just order your own appraisal, and as long as it shows that you have 20% equity, then the MI can be removed for your loan. Where FHA has a 0.55 factor. Now, that factor can actually vary, but the 0.55 is the typical amount that you'll see on an FHA loan. Now, this is not removable unless you refinance, or if you put 10% down, then the MIP is canceled after 11 years. So one conventional is automatically removed if you get to 20% equity with the appraisal, where FHA, you have to refinance or put 10% down at the time of purchase for it to be canceled after 11 years. And they also have a upfront mortgage insurance on FHA, which is a 1.75% factor, and that can be financed or you could pay upfront at closing. Debt to income ratios. So I do have a video explaining what debt to income ratios are if you'd like to check that out. So conventional, their maximum is going to be 45 to 50%. That's front end and back end ratio. And that can vary depending on the property type, whether you're doing an investment property, all of the above can be a factor, but their maximum, no matter what, is 50%. Then FHA has a maximum of 45% for the front end and 56% for the back end. 56 and some change. I've never gotten it to approve at 57%. So you just have to check to see what the system allows. And they both go through what's called an automated underwriting system. So it's like an AI, and it tells you exactly whether the loan is approved or not. It's not a human being stating that. But if it does not qualify or get approved through the AUS, then you have to follow manual underwritten guidelines, and that's going to be reviewed by a human being at that point, and that's more strict on the debt to income ratio. Property requirements. So conventional will do primary residence, second home, and investment properties. So that is one difference than FHA, where FHA will only do primary residence. Now, this is where they are totally different. Is FHA is going to be more strict on the condition requirements, meaning that there are going to be some properties that you're interested in that cannot get approved for FHA financing. So this is where you want to be working with a realtor who understands this and does not waste your time having you look at homes that you are pre-approved for FHA, but that home is not approved for FHA financing. So there's just some things on FHA loans on the property that will not be allowed, that will be allowed on conventional loans. Pros and cons of conventional loans. So the conventional pro is that they don't have the upfront mortgage insurance. They offer higher loan limits in some counties. Some counties will not do the high balance for FHA, where conventional all are eligible for the high balance county. They're less strict on the property condition, and all occupancies are allowed. Now, the con is that they are more strict on the qualification. It's going to be harder for you to get pre-approved with a 3% down 620 credit score. It's not going to happen on conventional. And they typically have higher interest rates than FHA. FHA pros and cons. So the pros for the FHA loan is it's easier to qualify with a minimum down, and they offer a higher debt to income ratio allowed. You see they went up to 56 and some change. It's just that front end that they're more strict down. But they offer lower interest rates. So those are a ton of pros as opposed to conventional. And the con on the FHA loan is that lifetime mortgage insurance. They also have the upfront mortgage insurance, way more strict on the property condition, and they only do primary residence. So which one is best for you? Well, you're going to choose conventional if you have strong credit and more money down, right? If you have a 680 plus credit score, you have 20% down, then you want 100% go with conventional. You also want to choose conventional if you're buying a second home or investment property, because FHA does not. Now, you're going to choose FHA if you have a lower credit score and limited on funds. And what I say by limited on funds, not just the down payment, but FHA, you can also sometimes take a higher interest rate and get some lender credits back to help you pay for some of your closing costs. You can't use that to pay down payment, but with FHA, you have more of an opportunity to get some credits back from the lender to pay a good portion of your closing costs, where conventional, that's very tough to do. So if you have a low credit score, minimum down 3.5%, and all you have is the 3.5%, you have a chance of still getting into the home with an FHA loan by taking that lender credit to cover a good amount of your closing costs. There you have it, a quick guide on FHA and conventional loans. Later on, I'll have a more in-depth video on conventional by itself and FHA by itself. But If you do have any questions, feel free to scan that Zoom barcode for a free 30-minute Zoom consultation. We can have a one-on-one and I can answer any questions that you have. Also, make sure that you're working with a lender that's not steering you to one, that they're giving you both options. That's very important because if you don't see both of them in black and white, and obviously if you can get pre-approved for them, then you want to be able to make that decision yourself. You don't want a lender making the decision for you. That's called steering, and that's a no-no. So please be sure to like and subscribe if you feel like this information was useful, and I'll see you on the next video.